Welcome back to Power Players. And we've got our good friend Jared Tendler, definitely a staple here at Topstep. Very nice to have you here, Jared. How are you today?
I'm doing great, Eddie. It's great to be here again. And, it's kind of nice way to start to close out the year. I know we're still a little ways off, but I'm going to be taking off
there you
for a
go.
couple weeks. So nice to kind of end with you guys.
Now, if you're not familiar and you're new here, Jared Tendler, leading expert on how your mental game impacts performance. His clients include world champion poker players, several PGA Tour players, entrepreneurs, and hundreds of institutional and independent financial traders. You've got a degree in counseling psychology, and you have a license in mental health counselor, 17 years of experience. So folks, sit back, relax, be a sponge, because there's a lot of good knowledge and sharing Jared's going to help us with. Jared, all you, my friend.
Thanks, Eddie. Appreciate it. And I guess I should update that. It's up to 18 years now. So getting older every year.
Of experience.
18 years. Yeah. I mean, and for those that don't know, so my background was as a golfer. I wanted to play high level professional golf. And then got a master's degree, counseling psychology, et cetera. And then basically kind of combined sports psychology and counseling to create my own program, which ultimately was, kind of born in golf and then honed in professional poker. And then, not shockingly, traders started picking up the poker book around a decade ago and said, like, you take the word poker and change it to trading, you got another book. Not really my style. It took a few years to write the mental game of trading.
Same thing with golf,
and same thing with golf. Yeah.
Still playing golf?
Still playing. Actually, I'm kind of circling my way back around. I'm going to be 50 in 5 years. So I'm kind of ramping up for, maybe one last hurrah of national championship level play. And then, senior, I don't think the senior tour is really up my alley, but certainly it'd be cool to play in, like the Senior Open. I don't know if I can get in the U.S. Open, but I'll certainly try the next few years too.
You reach for that brass ring, my friend.
Yeah, exactly. It's fun to have big goals, right? Otherwise, what are we doing here?
You got it. All right. So I'm going to duck out and I'm going to listen. Ladies and gentlemen, Jared Tendler.
Thanks, Eddie. All right. Well, lots of great questions have come in already in advance, and we'll have a good discussion here about, like I said, kind of my version of trading psychology, which is a little bit different, right? I think there's a ton of great resources out there, what I would describe as a lot of great advice. But if you don't have a system, then it ends up becoming a little bit more like, it's stock picking or, kind of copy trading in a sense. I'm not denigrating it by any means, but like if you're trying to truly upgrade your psychological, your emotional reactions to the nuances of trading, then you need more of a system, more of a systematic approach to deal with things. And then you can kind of pull from a variety of resources. We're not going to get deep into the system today, but you are going to kind of hear me describe things much more in a problem solving style, right? We're not just looking at surface level problems. We're trying to understand the causality that produces them. So just a little bit of a kind of framework to think about as I dive in here. So the first question is, I always seem to add to losers and never want to flatten. I would hold and hope that price comes back to break even in order to sell. How can I get better at being a better loser? Becoming a good loser is obviously an important thing in trading, namely because of how much it's going to happen. So there's a key word though in that question, right? I would hold out for hope, right? Hope is a really dangerous emotion to have in trading. And hope is really the emotion that's reserved for things that are out of your control. So there are lots of aspects of life where it's perfectly appropriate to have hope, but not in trading. Hope here is rather dangerous. And it suggests that there is something that is beyond your control. Now, here you are on an intraday time frame, even on a trade-by-trade time frame basis, trying to hope for an outcome. And of course, you don't have control of that outcome. But the fact that you're hoping for it suggests that there's a much broader issue here, which is that you are likely lacking some conviction and confidence in your trading strategy, or even in yourself and being able to apply it. And maybe there are other times where emotions get in the way and influence your ability to make good decisions. So then it would make sense that you would be hoping for an outcome, because you don't really have the conviction that you need to have more control of your results over a longer time frame. So you're hoping to get lucky today to make you feel better and kind of escape the pain and turmoil of having all those questions and uncertainties about whether or not you can make money long term. The other thing that could be here is that maybe you are just escaping the pain of losing. Losing can be painful, and they can be painful for the reasons I've already mentioned, but they also can be painful just because many people beyond trading just hate to lose, and that's okay. I don't know that I would ever try to convince somebody to love to lose, even as a trader. I mean, to some degree, like, you can get closer to that, but nobody's going to go out partying because you lost a ton of money today. But the idea is, can you be strong enough to take the hit? Kind of like a boxer taking a punch. There's a conditioning aspect to that. And trading, like poker, is very unlike a lot of other areas of life, right? There's a lot of variance and luck in life, but they tend to happen over much larger time frames, right? But in trading, I mean, you can do everything right in the short term and have that losses mount having done nothing wrong. And that can be incredibly not only painful, but also wear on your confidence, fray your anxiety and your nerves, create a lot of stress and chaos, which then leads you to sleep poorly, and then next day you're a little bit tired, and then trying to do it all again with more emotion at play and less energy to actually be able to do it properly. So bottom line is, right, we got to kill the hope, and you got to strengthen your confidence and conviction in a pragmatic way. I mean, maybe that means going back through your strategy and finding that the conviction to be able to hold to be able to actually close out those trades and take the hit. Right? It might be kind of a multifaceted solution there. I've been working through your course, which I assume you mean the Mental Game of Trading Live, which has been very well received. So I encourage all of you to check it out. And I found it extremely valuable. However, it has allowed me to see some things that need to be resolved outside of trading that are leaking into my trading. I've contemplated seeing a therapist. Is there anything else I should be doing? So this is quite common, right? Where patterns that exist, in trading also exist in your personal life. And they may originate from, deeper issues there. Now, what I would strongly advise is that you try to get a clear idea of what's happening both in trading and outside of trading. They're rarely sort of exact carbon copies of each other. And when you're going to go kind of do that more personal work, you want to have some preparation around what it is that you're even dealing with. The other thing is that you actually can use my system on a personal level too, right? The framework works. You may just need a therapist to help kind of wade through the details, because it can get a little bit messy and overwhelming. But it's great that you're becoming more aware of these patterns, and that's only going to allow you to have more options to solve these things. Ignorance may be bliss, but ignorance also typically means you're out of control. All right. If you enter a trade, then realize you made a C game mistake or error, do you cut the trade short or do you let it play out? And I would say that you should cut the trade, in part because if it plays out and it wins, well, then you're kind of getting a little bit of false feedback, right? You're not really kind of taking the hit as well as you want. If you can scratch it and take it for a small loss, it gives you the opportunity to immediately start to do some data collection and start to understand more about what was going on that led you to get to your C game, let alone what your C game actually entails. Because if you're unable to see, the sort of the degrading aspects of your mind and your emotions in real time, it becomes very difficult for you to stop it, right? When your emotions rise, you lose a lot of energy. There becomes almost this sort of paralysis in our minds. And you can, kind of note that when you have these ideas that are just not translating into action, it's you should like stay out of this position, right? Like FOMO's creeping up, it's like you missed a good entry, but you see other people, making money in this trade, and you should stay out of it, but you can't help yourself, and you get in. When you reach that level, these sort of C game mistakes are inevitable. And so your job becomes much more around identifying the details that preceded that. So you can see these warning signs, almost like charting your emotions on in a chart, right? Seeing the sort of emotional price action, so to speak. And so when you close the trade, you immediately can start to do that reflection, that analysis, and that is not going to change the outcome of this particular trade because it's over, but it can help you in creating that foresight so you can see these problems, see that you've actually entered your B game, and then take appropriate action, right? Maybe you need to take a break at that point. So often traders wait until it's too late, or they wait until after big mistakes happen. And we're really trying to weaponize your foresight, right? So that you can take action earlier and avoid those problems from even happening. More often than not, my intuition is correct, but I execute the opposite trades, which end up losing, and then I get frustrated. How do I fix this? Or make a habit of following what I think with what I should do. All right, so basically, like, how do I get to trust my intuition because I'm getting pissed off that I'm ignoring it and doing the opposite? First off, you guys can throw in the chat the link to my intuition ebook. It's a resource that is, I'd say, kind of works in tandem with the mental game of trading. It was a topic that I really wanted to have in there, but it just didn't really fit. And the book was already getting long. So it's free, freely available on my website to download. Now, what I would say about intuition, without forcing you to read that whole thing, although it's not that long, is intuition oftentimes is ignored because you don't even understand where it's coming from, right? None of you would walk down to the street. Let's say you live in a city, where walk to the corner and ask some random person, like, here's a chart of the last trade I took. What do you think? The randomness with that feedback would be so great. Like, none of you would actually do that. But in a way, if intuition feels like a stranger, well, then why the hell would you trust it? So when you start to understand more about what intuition is, it gives you a little bit more evidence for where it's coming from. And the bottom line is, intuition comes through like a bedrock of knowledge. Like, I don't think any of you that have been trading, seriously for less than a year should be relying on intuition. Sometimes even longer than that. You need a bedrock of knowledge combined with an optimal mentality, right? An optimal mental and emotional state that allows you to react to market data in a way that's very spontaneous, almost athletic, like some of the amazing feats we see in sports all the time, right? These intuitive ideas don't come out of nowhere, but there's this combination of your skill set interacting with the market in a very sort of subtle and high level way. And I go into more detail in the book. So that's one. Two, right now, what are you good at? You are very good at ignoring your intuition. So here you've got this idea, and immediately, right, the reflex that you have been training has been to discount and discard it. So on some level, there's got to be like a retraining of that. So maybe part one is, let's build up a little bit of evidence to suggest, why I should be relying on my intuition. Maybe you actually need to write down or go through many of the past trades that you've taken that were not based in intuition, but where intuition was kind of present, and then you ignored it, right? To provide more evidence to prove that your intuition is at least worth an experiment. And then the other piece of this could be segmenting a portion of your account just to intuitive type trades. You might even open up a different account within Topstep just for these and take them there. And think about it from a research and development standpoint, right? Your allocation of capital needs to be a small percentage of your overall account, much like a business who is doing R&D, developing new products, because intuition is basically like kind of the next product within your own system. We think about it systematically like that, right? There's sort of the B and A game trades that very well. Like, there's a lot of conscious logic that's behind that. But then there's this intuition that's really an evolution beyond that. So how do you develop it? In part, it may require more research, might require a little bit of testing. And if you treat it that way, kind of incubate it in a sense, treat it like a product that is, needs to be market tested, then it might take away a little bit of the sting from, ignoring it and going the other side. And then, kind of all this logic combined creates the evidence to then start to create that retraining of the habit. So when you have the intuition, you're going to feel that immediate negation of it, or the rejection of it. And then you're going to kind of pile in the logic that says, no, I can trust it because it's not a stranger. Here's the logic and reasoning behind it. Here's the evidence to prove that there's something viable here. May not play out here. Who knows? But there's experimentation here. I'm doing some R&D. It's like, it's all good. I could lose, no problem, right? If it wins, great. I'm still going to learn from it either way because there's something going on here that I don't fully understand. So treat it like a little bit of a project on its own. I am passing combines in 3 to 5 days. Sometimes can do 3 in a week, but blow up funded accounts in 2 days. Just can't control myself. All of a sudden, I tighten my stops, getting full of fear to get a stop loss. I understand the whole stupidity. Just stick to the trading plan, but emotionally, I'm just a wreck for some reason. I'm trying to do the journal. I read your book, which is terrific, but still struggling with getting emotions under control. Any tips or advice? Many thanks for all the work you do. So it's a small little thing here, but I often kind of question this when somebody says, I read your book. There's a lot of exercises in that book. There's data collection, there's mapping your pattern, there's a mental hand history, which is the tool to dig down at the root of your issues. Then there's the development of a real-time strategy, right? So this is all kind of part of the system working together to create change, right? Make progress in real time so you can start to work against, try to chip away at these problems. If you just kind of read the book and now you're looking for tips and advice, it suggests to me that you're kind of looking for a little bit of magic for a clearly more complicated problem. This whole thing is not stupid. It is not as simple as you think it is, right? There's something clearly happening when you get a funded account, and it's not uncommon to have this happen, right? Where all of a sudden things get real and the emotional temperature goes way up. And what happens in that time? Your weaknesses get exposed. And so that's what's happening here. So I would just be a bit more pragmatic about how you're trying to correct this. It is not going to happen in a single moment. There's not some magical insight that's going to come down and have you be able to solve this. You got to work through it, right? I mean, give you an analogy here. You can currently, bench press 50 pounds, okay? But you believe that you can walk into the gym having read a book on physical fitness and now can magically lift 150 pounds. It just can't happen. So it's not for a lack of intelligence, right? The lack of intelligence here is not, it's not part of the equation, right? What's happening is the emotions are making you dumb. The emotions are making you do dumb things. And that's what they do to all of us, myself included, right? There's just a process in the brain that gets shut off that causes you to revert back to a more primitive way of operating. And that's what happens. So I'm just an emotional wreck for some reason. You got to figure out what those reasons are. Right? There's not, I think, a lot of difficulty to figure that out once you start looking. But when my guess is subtly kind of hoping for some magic, kind of wishing that the problem would be easy. There's some illusion of control or illusion of mastery, right? You read a book and, think that now you can just apply all of it. I mean, I will sometimes reread passages of my book and will realize something slightly new. I mean, I've heard people reread the book, many, many times and learn something more each time. So it's more of a resource to help you to do the work, not a resource that's going to download into your brain like we're in the Matrix and suddenly, solve all the problems instantaneously. That does happen, but it's like really a small percentage of the time. And those issues were very, very minor, right? In general, what this book is providing to you is a resource and a tool to help weaponize your battle, right? So you can, kind of take on these emotional reactions each day. And as I say, right, work towards sucking less, right? They're going to come, they're going to trip you up. But if you can not blow the account, if you can blow 80% of the account and then start grinding your way back, that is massive progress. A lot of times the efforts get involved there, right? You get, lose 2-3 positions and all of a sudden now you're down, let's say, small percentage, then take a big loss. And now you've only got 40% left of the account. And it's like, well, F it. Let's just throw it in Hail Mary, see if I can get it all back all at once. And what does that do? It doesn't allow you to learn any kind of hardiness. It doesn't force you to apply real corrections to those issues. It's just, let's just start again and see what happens, right? Clearly you can get through the first part, but now this is the second phase, which is far more emotional for you. Okay, well, regarding the book, I just started reading your book, loving it. Do you recommend that I read it completely and then start again and do the exercises? It's really to your discretion. I mean, I've got people that will kind of start doing it immediately, start doing, the mapping or the data collection immediately. I think the data collection you for sure can do immediately. The mapping, I would maybe kind of hold off, because I think sometimes one of the mistakes that people make is thinking that they have to map every single problem, right? Whether it's greed, fear, anger, confidence, or discipline. You don't have to map all 5. Like, you can only map like the ones that are the most consequential to you right now. Maybe it's, let's say fear and greed. Mental hand history, you absolutely can start using, kind of as problems arise, just to kind of practice going through that process. And then, as you get a little bit farther in and have a better idea of the overall landscape of what you're dealing with, then you can start to hone in. But you absolutely can just read it all the way through, give yourself kind of an overall picture of what is there as a resource, and then selectively go back to the sections that are most applicable to you. But I would for sure make sure that you get to chapter 9, because chapter 9 is where the real-time strategy comes into play, and where we're really working towards, kind of creating a strategy that's going to help you build not just control of these problems, but resolve them, like solve them so that they go away. And that's kind of the magic in the system, is that through all this work, you actually can eliminate FOMO. You can eliminate greed, right? You can eliminate the tilt for the reasons you're currently having now. You're always going to have emotions, right? But we want those emotions to be very kind of clear, in a sense, more sensitive to what's happening in the market and becoming an asset to you. Emotions that are affecting many of you are contaminated by these underlying flaws, biases, wishes, illusions. And so we're bringing our own crap into the market and imprinting this perspective that isn't real on what's happening, right? And then our actions kind of follow suit, versus having much more of a clear mind, right? Almost like having clear glasses, seeing what is happening and then being able to respond and react to that. That's where your intuition is really, really strong, or have the potential for that. But, if you don't understand what those flaws, biases, wishes, and illusions that you're chucking in the market, it's going to be hard for you to make the kind of progress you want long term. So that's why the resolution of those problems, right? The upgrading is really so powerful, because it does help you to create more of that clarity on a regular basis, versus having to defend against and try to control these impulses and reactions. Your mind is not built that way. It's very inefficient. So we want them gone. Takes a little bit more work to get there, but once you do, it is transformational. And I've got lots of clients, trading and elsewhere, to prove how valuable that is. While I can handle a market that goes against me, takes me out of a trade and moves on, but how do you mentally take a trade that stops you out by 4 ticks and then turns right around and heads to your take profit, as this trade did? Should I stop trading for the day, chalk it up to the way things work? This has really messed me up today. All right. First off, anytime a trade, whether it's this one or other, messes you up emotionally, you don't have to stop trading for the day. Okay. Now, maybe in the short term, that might be advantageous to you because the risk is too great for some bad behavior. But either way, I would take some time to just dump on a piece of paper what is going through your head. What are you experiencing mentally? Like, what are the thoughts that are present? What are the emotions present? Behaviors? What are the actions? How's your thinking about certain positions or the market changed? Right? That's the essence of the data collection. And by writing it all down, it's going to give you maybe a chance to sort of separate from that emotion a little bit and kind of get up from being consumed from it, so you can breathe a little bit and see a little bit more clearly. And then you can make a decision, right? Whether or not your emotions are stable enough for you to be able to continue to trade and move on. But that data collection is a great way to kind of disrupt the pattern a little bit. And it also helps to give you information that's going to help you to better understand what that reaction was all about, right? Because we're trying to dig down to the underlying causality. You need that information, but too often, you just kind of quit for the day and then, go work out, go blow off steam, go for a drink, whatever, like anything. And that's not terrible. There's definitely some benefit to that, but these patterns are going to happen again and again and again. So if you don't actually start to solve them, then what are you really doing? So you're just gonna have to continue to manage them. That's not really what I'm after. So the data collection, the journaling, the writing is a great thing to do, and then you can start to make a decision. But in this particular case, I would just say shit happens. I mean, yeah, like that. This is the chalk it up to the way things work. Yes, that this is how things work in trading. These are regular occurrences. They're not fun, part of the game. Now, maybe the guys at Topstep, Eddie included, might be able to say, something in terms of the techniques around this and strategies. But I tend to think, in my experience, that those are a bit more advanced in terms of how you might be able to, re-enter trades. And there are some clients where they will do that if the setup is still viable. But then, some of you can get into some bad spots because you'll keep kind of trying again and again at a trade. And then by the time it actually does take off, well, then you've, at best maybe broke even because of how many times you failed the first time around. So yeah, I think there's both a technical and a mental thing around this, but from a strategy standpoint, I tend to stay away from kind of hardline rules like quitting when they're more, I'd say more accurately, like tools that we can use at certain times. Do you have any tips on taking breaks that aren't related to market holidays? Thanks for your help. Also, I've tripled my P&L since listening in on these sessions, which is amazing and fantastic. So congrats on that. We want to keep that going, which is why taking breaks is so valuable. So in general, traders are just sort of far too consumed and connected to the charts, especially those that are kind of newer to this game. There's a conditioning that needs to happen here. I mean, Eddie and Michael and the other guys here, right? They've been trading for years, if not decades. And so just from a pure conditioning standpoint, right, they can be in front of the charts the entire day without really having it wear on them. Now, of course, everybody's human, and then there are times where they're going to get tired. But my point here is that as you are building your stamina, right, it's very important to take breaks. And there's a mental value to it. There's also a physical component to it, and those kind of go hand in hand because it's physical energy, which is kind of powering the mind. We've all been in situations where we've been exhausted, and how dumb we become at those times. So taking breaks, I believe, actually, that you get paid for taking breaks, right? Especially if you're a profitable trader. So how often do you do it? My suggestion would be minimum take 1 day off per month beyond the weekends. Take 3 to 5 days off once a quarter, in addition to that 1 day off per month. So that's typically a lot more than many of you are willing to, and wanting to take. But when you think about the sort of the aggregate of performing at a high level more often, right? If you were in your B game for, let's say, 50 to 60% of your trading time, and let's say your A game 40% of the time and B game 10% of the time. Well, if that calculation changes because the rest that I'm suggesting, the breaks that I'm suggesting, changes to like A game being, 60 to 65%, B game at like 30 to 35%, and then C game only 5%. Like, I mean, you're theoretically getting paid for that time off because it's helping you to perform at a higher level. Not to mention if it helps you avoid C game, which could be even, kind of more significant or severe, then that's happening. Now, during the trading day as well, I would look for small opportunities to take breaks. A client the other day I was talking about who trades on a 15-minute chart. Well, I mean, he's got, easy opportunities to take breaks, like even just for 1 or 2 minutes, because the candle's not going to close. Not going to take a trade in that time frame. So it's just easy once an hour. And that's what we kind of came up with, was once an hour, take 1 to 2 minutes off and just turn around, go for a walk, just get a breather, right? And that kind of resetting is really critical. You get so consumed. It sometimes can be draining in a way that you're not really aware of. Now, I'm not saying that this has to be a rule that you're always playing by, especially given certain market conditions, but just on average, those little breaks kind of add up and help to sustain longevity, both during the trading day and also kind of as the week goes on, right? So you're kind of having more energy on a Thursday, Friday than you normally would. And then as the months go on, able to avoid burnout a bit easier. Hi, Jared. So I've read a few times about one of the things a trader does to himself, whether consciously or not, and that is a belief that they don't deserve to win. They don't deserve the money or success, etc. This seems contradictory to what we try to do, but I happen to believe it. Where do you think this comes from, and what are your suggestions to overcome this thought? Even though I think it's a subconscious belief, I hope this makes sense. It absolutely makes sense, and typically I would kind of frame this as like a fear of success. It is common. It's certainly not kind of part of every trader's psyche and mentality, but it's certainly common enough where you're not alone here. My experience is that it's more based on confidence, right? That there's a confidence weakness. So typically what can happen is as you get kind of climb the ranks here and start to have some success or, get close to it, there becomes kind of a greater separation between your skill and your confidence. And that can often happen as a consequence of high expectations and perfectionism. It's one of the most common kind of subtle damagers of confidence, right? They are great for motivation, but they're pretty crappy for confidence, right? Because here you are being measured up against this mythical standard. And by falling short of that, you're getting, kind of knocked down. You're losing confidence at times where you're actually maybe making progress, just not at the rate that your expectations demand. And so you lose confidence as a result of that. So then when you're sort of climbing the ranks, right, success is going this way, skill is going this way, right, but your confidence is kind of flatlined. As that separation gets larger and larger, the stress and tension of being able to deal with that success becomes greater and greater. Now, there might be a personal component to this, right? Maybe there is some, I've had clients who grew up poor and they just sort of never saw themselves, like they were just kind of conditioned in that environment to see money as something for other people, not for them. And of course, they wanted to break out of it. They didn't want this mentality. They didn't want that lifestyle. And yet those, that wiring, that training, that belief system carried forward, right? It's that old, you can take the kid out of the city, but you can't take the city out of the kid. And of course you can, right? But it takes a lot of work to uncover those deeper belief systems and those, kind of flawed perspectives that influence our perception of success. So I think those are kind of the big issues. The last one that I've seen as well is some fear of what success would bring. A lot of us have seen money go to people's heads. We've seen people make lots of money and then lose it, right? Kind of the classic lottery winner scenario, which certainly happens in trading. All you have to do is go to Wall Street Bets on Reddit to see some of the chaos that can happen, after making large amounts of money. I had clients in the crypto boom who were ex-poker players who made, 9-10 figures. Sorry, not 9-10 figures. Made 7-8 figures in crypto, and then I would say they lost it all, but lost a lot. And then so it's like sometimes that fear of success is like the fear of being able to handle it properly, both from a financial standpoint, also from a social standpoint. You don't want all the eyeballs, you don't want the expectations. There's a lot of things. It's like the more money, more problems, right? And there's having all that money is not kind of a guaranteed, easy, happy life, and there's some mythology around that too. So yeah, there's kind of a lot that goes into it. I would say for you, try to make that subconscious belief more conscious, right? That's the idea, right? When something is truly unconscious, it is incredibly difficult to access. But when it's subconscious, that's suggesting that it's kind of bubbling up to the surface and you're beginning to kind of get closer to accessing it with a little bit of reflection, a little bit of time, just kind of keep asking those questions like, what is going on here? Eventually it's going to start to bubble up and you'll figure out more of what is kind of powering that belief. How do you get yourself to stop trading for the day when you're up? It's so hard for me to stop trading. I always end up over trading and losing it all. What are some of the mental exercises we can do to help us stop when we're ahead? So just to kind of give you a little bit of a preview, I know I mentioned chapter 9 before, this real-time strategy. The real-time strategy involves 4 steps. Number 1 is recognition, right? So you got to recognize that your problem has been triggered. Then we're going to disrupt the momentum of that pattern, okay? Deep breath, taking a walk, standing up, jumping jacks, anything, right? Just don't stay stuck in that reaction. And what that's doing is kind of readying us for step 3, which is what I call injecting logic. Injecting logic is kind of a fancy term for thinking, but it's prepared thinking, right? You're actually studying the statement, phrase, paragraph, right? And what that's doing is helping to upgrade the faulty beliefs, wishes, logic, hopes that are kind of behind this initial reactions, right? So you get the reaction, you're going to disrupt it, and then you're going to come in with a correction, okay? And that correction is prepared ahead of time, so it has some potency to it. Your emotions are more powerful than the mind, right? So if we're going to actually use our mind to defend and correct our emotions, you got to be ready for it because they are more powerful by nature, okay? So what I've said is kind of the framework. Now, specifically here, we kind of have to know a little bit more of what's going on, like when you are up on the day, okay? Are you becoming overconfident? Are you becoming greedy, right? Maybe those are the same similar things. Is there a little bit of fear of maybe like missing out? Is there like a bit of a desperation to realize your longer term goals that just kind of compel you to keep trading because you're in a race to get there, right? And you're not able to kind of have a more macro patience with just taking steps sequentially day after day and, working towards those goals long term. It's like, no, I want it now, right? So you got to figure out kind of what's powering your inability to stop, and then you can develop a strategy based on what I just mentioned. And I would suggest, right, so the early warning signs would be maybe after each successive closed winning trade, you're going through this kind of mental rehearsal, right, the injection of logic, preparing yourself to kind of push beyond this current barrier in a pragmatic way. But, there also might be some time period because I have clients who don't trade certain parts of the day because it's just not ripe for their strategy. And over time, they found that it's even break even, slightly losing, or even a marginal winner, in which case, all of which is not really worthwhile to trade at that time. They'd rather take the time off and go do something else that's more valuable. You can have that choice if that's, going on for you. So I would make sure that there isn't something on a technical basis that the times with which you are trying to push yourself through are actually still viable and there are real opportunities for you to trade and trade the right way. Or to actually stop if it truly isn't. Do you apply any of these principles to your golf game? I need some help there too. Yes, they all apply to golf too, right? So I've worked in poker. I've worked obviously here. I've worked with golfers. I've worked in esports for a number of years. Those of you know the esports space. I worked for 4 years with Team Liquid, which is one of the largest esport teams in the world, had a lot of success using these same principles and tactics. I've got a radiologist. I've got, sports bettors, horse bettors, and other business people. So it applies everywhere because at the core of the system is, working off of kind of the fundamental rules of how we as human beings operate. And then it just becomes kind of the input that you're throwing into it that's different. And of course, the landscape, the competitive landscape in golf is different than trading, right? Once you start playing, like you're there, as opposed to the previous question where it's like, no, I'm 3 under after 3 holes. I'm done. I quit for the day, and that's what I get to have my score for the day. You can do that in trading. You can't do that in golf, right? So you're stuck there, kind of like a tournament poker player, there to the end. So the application becomes a little bit different, but yeah, no, it certainly all applies. All right, I think we got time for a couple more questions here, and then I'm gonna head out. Some days when I put on a trade, I get such an unsettling feeling in my stomach. I've been trading for about 12 years now, just now becoming profitable, and I've never had this feeling. Is it because I'm starting to see real money? I don't like the feeling. It makes me feel like very, very unsettled. I would say that yes, it is partially related to you starting to see some real money, and maybe more related to you being worried that you're going to mess it up. 12 years not profitable, or 11 and a half years not profitable. There's probably some scar tissue in there, some bad losses, some maybe there were some periods where you're doing well only to blow it up. There's probably a lot of chaos in that, is my guess. In which case, you may not have solved mentally and emotionally, kind of that scar tissue, right? And so if I had literal physical scar tissue in my shoulder, right, I would have some limitations in my mobility. Now, if I'm not playing high level golf, I'm just kind of going about my day, I may not be in a position for this to hurt. And so generally speaking, maybe you haven't felt the pain until now all of a sudden you are in a position, right, to have that limitation get exposed. So I would suggest digging into your past trading history for any particular kind of markers of trauma or scar tissue. And the easiest way you can figure that out is you just like kind of think back. You just kind of like Rolodex, go through, years and past trades and see if anything jumps out, right? A lot of times there's some blown accounts, there's some big losses, big missed opportunities that stick with you. And what I want you to do is just kind of take a few deep breaths and allow yourself to kind of sink back into that memory and see if you can reawaken it, like bring it back, make it alive again. And then what you're trying to figure out is, do I remember feeling bad and pain and angry and whatever, or am I actually feeling that now? And when I have clients that have, real scar tissue, real trauma, their heart rate will immediately start to spike. They'll feel tension in their chest. They'll feel some anger in their head. Just remembering the memory. That's not how memory is supposed to be stored. And that's an indication that there's some trauma that needs to get worked through. And yeah, we're talking about trauma, right? Now, a lot of people think about trauma in a much more, kind of macro, bigger picture standpoint, like coming back from war or having some kind of, physical or mental abuse, like some severe things that occur in society. Well, within trading, the same thing can happen on a smaller scale, right? Here we are in a very protective environment, thanks to our military, right? We get to live in a bubble here for the most part. Many of you do. And when you live in a bubble, we tend to be a bit more sensitive to smaller things that are felt not with the same degree of severity as those that, are actually experiencing war or kind of bigger versions of trauma, but they impact us in a relative way, get kind of fused in our mind, and then they get triggered here or triggered at other times, right? Many of you who are having trouble, with blown accounts, actually the example for the questions from before, maybe there is some of this in here, right? And so when it gets triggered, right, in present day, certain situations, right, in this case, making money, that old stuff gets triggered. And now you're dealing with a disproportionate amount of emotion present in a way that you just don't have a fighting chance. So trying to figure out if you've got some trauma in there is sort of the first step. And then, I don't have enough time right now, unfortunately, to kind of help you work through the trauma. You want to join the Mental Game Trading Live, we can do it there, right? And they've got a lot of resources on how to do that. But yeah, for now, we just kind of figure out. That's my guess as to what's going on for you here. All right, last question. When I reach the $2,000 mark in my 50K combine, I get excited that I'm near the 3,000 goal and almost funded. My last combine, I lost 1,000 the following day and eventually hit my maximum drawdown. I think I was too focused on having a big day to become funded, and the fear of losing was even more apparent than before. So here's the deal. It's not just that you're excited, it's that you're actually realizing a future, right? It's totally fine to envision your potential. But when you start to experience real emotion about a future outcome, it's almost like you're trying to realize profit prematurely, right? It hasn't come yet. You gotta, it's the kind of the classic, you gotta stay here. Getting ahead of yourself, if it feels uncontrollable, then it's likely related to some confidence issue, right? You're kind of needing to pass that combine in an excessive way versus passing it the right way, right? And then you're going to be more likely to sustain yourself once you do. A lot of times there's sort of this mythology that, all right, well, once I pass this combine, well, then it's all glory and I'm going to be successful and all off and running. It's like, well, there are challenges that you're going to face at every step of the way, even the best traders in the world. I'm sure, Eddie and Hogue and the other guys here, like there's no perfection here, right? There's constant evolution. There's constant challenges that the market is going to throw at you. And so, yeah, like just focus on doing this first step, right? And keep yourself here, because otherwise you become kind of like the marathon runner who, hits mile 20 and is like, cool, I'm done. But then, no, you're not. Like, finish the freaking race. And then you can be done. And now I just finished the race, so I'm done. So there we go.
Jared, fantastic, honestly. And we apologize for those questions that you didn't get to. I was at the edge of my seat on everyone, and I took some notes here. Of course, I've been in the business very long, but still, sharing knowledge and with your suggestions, you're making all of us better traders and better people. Bottom line, better people. So appreciate you being here with us. We've got you back, I guess, in the future. I hope so. I think we're going to do that. Fan favorite here. But you have yourself a fantastic week. And one more time on the book, it's the jaredtendler.com intuition dash ebook. I'm going to put that, if we can get that back in the chat one more time, check it out. And Jared, thank you very much for your time.
Thanks,
wonderful person. And see you next time, my friend.
Appreciate it greatly. And wish everybody a happy holiday and happy new year. And I'll see you guys next year.
All right. Take care, man.
See you guys. Bye.
Bye-bye.